Good morning, everyone. Welcome to our Tuesday morning trading room. Bear with me a moment here. I haven't got my charts set up just yet. Just finished loading the trade manager. It doesn't look like we're missing too much anyway. The market's dead flat yesterday. We did see a fair amount of volume go through, which suggests that, there were a lot of contracts trading hands, but overall, here was yesterday's session right here. So nothing to get too excited about this morning. We're continuing slightly below yesterday's lows. I've been looking for the stock market to correct for quite some time now. It's not that I'm bearish on the stock market, I just think that we're a little bit overdue. Of course, it hasn't corrected yet. All right, one more chart, and then I'm all set. All right, all done. The euro a little bit bullish this morning. And crude oil also a little bit flat here to start the day. And we'll just give the NASDAQ here a moment to sort itself out. Poll asking, with an 8-tick NASDAQ, what would be the correct tick setting for the filter? Well, I'm assuming you're asking about the Raptor. I tend to go with the default settings. Actually, with my default settings, I've got my filter set at 10, but the defaults are 12. You can see it's not going to make that much of a difference. If you're a couple of ticks here or there, it's really not going to skew the numbers that much. There's a real temptation to fall into that trap of trying to optimize everything so that you never get a losing trade. And believe me, I know that losing trades are no fun. Nobody likes losing money. But trading is more than just the signal. Yes, a good signal is important. But you also need to have good money management in terms of not risking more than you can afford. And you also need good trade management. I know it kind of sounds like one and the same, but they're slightly different. The new Raptor, of course, much more tweakable than earlier versions. The DTS system, for instance, is non-tweakable. The only thing you can really change is the bar size, and that is by design. Okay, we're getting a little bit of a bullish push. The only tool really to give us a signal so far is the Falcon. We do have a trend change signal in the Falcon. we are getting, yeah, there's the soft edge buy on the Raptor. So that has triggered. I'm just going to punch in with a buy order there. So the soft edge buy, of course, occurs, it's our counter trend signal. So before you have a counter trend, you need to have a trend or something resembling a trend, and then you need to have a test of the extreme. You need to see the market try to recover the original trend and fail. And that's where we're getting our counter trend signal. David asks, good morning, Eric. Does your sense that we're due for an equities market correction come from, or is it supported, or I think David's asking where does your sense that we're due for an equities market correction come from, or is it supported by a simple S&P chart read? Okay, hold on a second here. Let's build a new chart, and we'll look at the S&P, why not? All right, kind of went over this yesterday, but it doesn't matter, I'll go over it again. The market has gone parabolic. Parabolic is when the market does these kinds of things. When your slopes just keep arcing higher and higher and higher. Parabolic markets are very fast-moving markets. They can also be a touch unstable. Let me show you here on the NASDAQ. It actually makes a slightly nicer arc. Okay, so there's no question the market is bullish, none whatsoever. Here's the part that's giving me pause though. Right here. We are now outside of our trading range. Markets like channeling. Stable markets love to stay in a channel. So we had this tight little trading channel. Market goes toward the top end, eventually drifts, finds some support, goes up, finds some support, goes up. But now we are through that top end. Now normally you would think, hey, this is bullish, right? We're going gangbusters here. We're breaking out the top side of the trading range. Not really. That's not usually bullish. That's actually a little bit more bearish. It's almost like the market is running on fumes. So that's what's kind of making me a little bit leery. Let me throw a volume chart on here also. All right, so you'll see this red spike right here was yesterday's trading. That's a lot of volume for a market that isn't going anywhere. You would expect a tiny little bar like that, to have volume like this or volume like this. That's what you would consider normal for a tiny little bar. There's a lot of contracts exchanging hands and a market that's not going anywhere. So that's giving me pause also. But the trend is up until proven otherwise. We've got some serious momentum to the upside. Friday's session, big rally up. And I do believe that was true in the S&P as well. Yeah, Thursday and Friday session, big strong rallies. So until we see that test of the extreme and the failure, I will remain bullish, but cautiously bullish. Okay, we've hit the break-even trigger, and we're just about to kiss the profit target. Hooray! First profit target. Got a runner in play. So far, so good. Oh, we've actually got a little bit of an uptick. All right, come on, give me one more swing, and we'll get a little bit more aggressive on those stops. Got the sellers kind of beating up on us a little bit. This is where we're near yesterday's highs. So Friday's highs topping out at 58.91 quarter. Seeing a little bit of an early reaction there. Our Falcon trade also worked out nicely. This was our trend change signal right here. It was followed by a late filter entry. So two opportunities here in the Falcon. And looks like we had a couple opportunities here in the hawk as well. A first micro macro cross and a macro pullback signal. If we can get a bullish break above yesterday's highs, that would be 58.91.5. We still got a little ways to go. We will be well on our way to pressing 5,900 and maybe even 6,000. You just know the NASDAQ traders are chomping at the bit to get to 6,000. Oh, while I think of it, I will mention this to you as we get closer, but Friday, I'm not going to be available. Sorry, I got conned into taking a friend to the airport. I know. So I won't be able to host the room Friday. My apologies. Oh, come on. Let's get over the hump here. One more push. Where's Ray Burke when I need him? Get in here and do his push. All right, I'm going to enable the stops. I'll go with the parabolic down here. If the market fails at this point, I may as well capture a little bit of extra profit. You can see we're getting our cloud crossover signal, which is also looking bullish. Okay, buyers trying hard. Come on. We're going to see them press 58.91. Well, first we got to get to 58.90, but they are going to press it. The market does like to retest highs and lows. Great question here from Fred. The Fred asks, is the Raptor cloud the same as the Eagle cloud? Yes, except what we've done is we've doubled it up. Early on with the Raptor, one of our Raptor owners said, hey, you know, I'm getting really good results off of a double cloud. So that became standard with the Raptor, is running 2 clouds. So whereas the Eagle only has the one hard edge, the Raptor, because it incorporates elements of all 3 birds into one, has a double band. So we get some faster signals as opposed to some of those that we may have gotten on the Eagle. But yes, the cloud is borrowed from the Eagle Trend Trader. The whole Eagle Trend Trader is actually programmed here into the Raptor filter. The bar color and timing is borrowed from the Hawk, and the primary signal generation is from the Falcon, with Hawk and Eagle elements in there as well. So that is how your Raptor hybrid works. All right, they're struggling here a little bit more than I would have liked. I may have to intervene and actually push the market up with my mouse. So we'll just get them going here. Come on, get up there. I've been watching the Geiger counter here. Oh, it did pull over now to the bullish side. It was dead neutral for the longest time. It's sitting just like this as it is now. Wouldn't tick higher, wouldn't tick lower, just perfectly balanced. Oh, that's not what I want to see. I don't want to see the sellers pull the market lower. I want to see, there we go. I want to see a little bit more bullishness come in. Here we go. It's pulling and holding to the buy side. That should have a little bit of follow through here, at least for the short term. Not saying the market's going to have a big rally as a result. Yeah, Mark says the new Duracell quantum batteries make the mouse trick more powerful. Yes, the Magic Mouse is still in beta testing, so I'm the only one that has a copy of it, but it does allow me to influence the market by pushing the market higher. Come on, get going, get going. It might be time to change the batteries out. It's not quite as responsive as it usually is. I am running a very aggressive stop, by the way. If I wanted to try to run out the swing, a break-even stop would make more sense. Yes, Mr. Buckaloo is correct. An overly aggressive short will also send the market higher. How true is that? Yes, there's a lot of days where it seems the market has my number. I buy, it goes down. I sell, it goes up. As a rule of thumb, however, you know how we just looked at the daily chart this morning? Uh, if the market is in an obvious uptrend, you're going to have a tendency to do better on the buy side of the equation. That's not to say there won't be an intraday, at least an intraday correction. Those we can almost always count on. But, you know, when in doubt, buy. The market is up. When in doubt, take the buy signal. Here on the Raptor pre-market, you can see we had a nice cloud crossover signal as well as a hard edge bounce signal, both of which had enough in it to at least reach its profit objective. But it does seem like the counter trend signal, or the signal that is in sync with the longer term trend, had a better follow through. Fred's asking, what's regulating the bar width? Let me show you that on one of the other tools here, Fred. That is here on the data series. I'm using the Indicator Warehouse dynamic equivolume bars. Now, for those of you who are not familiar with equivolume charting, what equivolume bars do is they incorporate volume into the printing the bar itself. So the bars that are wider have more volume associated with them. It's an easy way to incorporate volume into your charting. The thinner bars will have less volume associated with them. What makes the Indicator Warehouse dynamic equivolume bars different from other equivolume charting is that they will work with practically any chart style. Most equivolume charting programs only work with regular candlesticks, but the dynamic equivolume bars from Indicator Warehouse will work on mean Renko bars. They'll work on, well, practically any bar style. Like I said, they'll work on tick bars. If anybody is interested in those, it's best just to contact Adam directly, and he will fill you in, give you all the particulars. And it looks like I'm going to get tapped here in a second unless we get some very aggressive buying going on. You can see that the market will always turn on larger volumes. So here was the open. So a lot of volume coming into the open. One of our owners loves the dynamic equivolume bars because he will always look for the fat bars, and that's where he's going to expect the market to provide support or resistance. So we've got some substantial bars up here, so it looks like around the 58, 88 area is going to be substantial, as well as the low of the morning, somewhere around 58.70, half is going to be influential. Okay, a quick little counter trend signal here off of this tiny little test of the extreme. Paul asks, my volume was not working when you opened, so I did not hear your response to the filter setting question. Oh, I just go with the defaults. Uh, was that your question, Paul? Yes, it was. Okay, so Paul asked, with an 8-tick NASDAQ, what would be the correct setting for the filter? I just go with the default. In this case, it would be 12 ticks. It's really not going to matter that much if you go with a slightly faster filter. If the market is very, very slow, sometimes you'll do better with a slightly faster filter. I did have it down to 10 ticks, but 12 ticks works just fine. All right, so here we're getting yet another buy signal. This now our hard edge bounce that's trying to form. So the market retreating to the hard edge. Remember, whenever we encounter the hard edge, we always anticipate a reaction. Oh yes, there certainly is. Paul says lots of bearish divergence on the NASDAQ. That was the other thing I forgot to point out when David asked earlier what was making me a little bit more bearish on the stock markets. It was, that the markets have gone parabolic, that we've kind of broken out the top side of the trading channel. And of course, as Paul just pointed out, there's bearish divergence. So if you're looking at a momentum style oscillator, something like RSI or momentum or MACD, you're going to see some pretty significant divergence there. And that's making a lot of traders nervous about getting long. John's asking, are you looking for a fat bar from here? Well, it's always nice to see volume. I think that's what you're referring to, are these heavy volume bars. It's always nice to see a little bit more volume, to support your buying or selling, as the case may be. But you're going to notice that when the market is actually moving, the volume per bar is light. That's because the market's not wasting much time. The heavier bars form when the market is less decisive. You get a lot of volume going through a relatively small price range. This is going to be a tough buy. Here we go. Oh, they slipped me a tick too. Stinkers. So the problem with this trade, it has the potential of turning out to be a test of the extreme. Right? It has the potential of going back up here to the 58.88 area and then failing, in which case that will try to send the market lower. Come on, there we go. Let's get above 84. There's 84, 84 quarter. There we go, 84 half. Just about to tag the break even. Come on, get up there. Really? You scoundrels. Let's make it a little bit easier for them. There we go. So this now, a very serious retest of this 58.88 area, which is part of the reason I brought the trade to break even, because if it fails at this point, it's going to try to run the lows. It's going to try to test the lows. So I'll be content with a break-even stop out. However, if we can see this bar finish strong, it trades at 58. What's the high going to be? 86 half. Then we will see the market run the high of the morning on its way to yesterday's high. So here we'll give it a little nudge again, get it going in the right direction. There we go. Come on, just push it up. Get going. Okay, the bears don't know it yet, but there's a very good chance the market's going to press here to the primary resistance line at 58.92 quarter, which is essentially going to be a retest of yesterday's high 58.91 half, but the support and resistance lines saying nope, we're going to get up to 58.92 today. Come on, get up there. Okay, hooray for us. So not a bad morning, certainly a little bit more volatility than what we've been seeing the last couple of days. You can see the Geiger counter pulling hard over here to the buy side now that we've broken the high of the morning. We're pressing now that 58.91 area, which is Monday's high. And we should see the primary resistance hit, which is going to be around 58.92. Had a nice red bar buy signal here on the hawk. Let's take a look at that for a second. Okay, so we get a red bar buy signal, and as you know, the red bar buy signal is a signal we can buy, or it's also our counter trend signal. We can look to short below this one. I would favor a buy, however, and I would favor the buy signal because we haven't tested the extreme yet. Yes, we had a tiny little retest here And you might even say this little hiccup here was a retest. But normally the market's going to give you a very clear retest, a very clear failure if you're looking for it. And the logistics of this trade are very nice as well. You can see we've got a lot of room here to try to retest the extreme, and our profit target is only looking, to take a very small portion out of that. So not too much difficulty getting that trade to work out. All right, well, just on hold here for a moment, not ignoring you. There's just not anything going on. Crude oil dead flat sideways. The euro calming down quite a bit from an earlier rally. Just checking some of the online articles and whatnot, and some of them suggesting the U.S. market's a little bit subdued before the election in the United Kingdom on Wednesday, or pardon me, Thursday. John's asking, looking at the bar volume, would you say down volume is drying up a little? Well, see, that's the thing with volume, is it's very difficult to say that the volume, say on this bar right here, which is a relatively wide bar, there's obviously more selling coming in on that bar. So I would not say that the bearish volume is going away. No, if anything, I would say there's a little bit more bearish volume. You see, volume always increases where the market turns, and that should make sense. It's not just a lack of buying that stops the market from going up, it's also increased selling. And likewise, when a market turns, well, this was overnight, when the market turns and heads higher, it's not just a lack of selling that turns the market, it's aggressive buying. So you will always see volume increase at resistance and support areas. It's never clear whether that is what they call stopping volume or whether it's just volume kind of falling off. Yeah, Aspen said, crude oil is not as easy as the NASDAQ. No, sir, it is not. We do have a first micro-macro cross forming here. I would consider it, but probably not until the market takes out the high. We've kind of lost all our earlier momentum. All right, well, the fact that they're taking this long to do something is making me think that maybe, just maybe, we'll see a little retest before the market heads higher again. The market has been paying off to the long side, so I would favor buy signals over sell signals at this point. John's asking, could this just be a pullback we're going through? I think overall the market is bullish today. I think a lot of traders are waiting to see how aggressive the market will be responding to yesterday's highs. You can see that's where we're at right now. We've tagged the high. Stop it. Stupid computers. There we go. So we have a high 58.91. Yesterday's high is 58.91 half, or pardon me, quarter. So, given that yesterday's trading was like this, just a great big sideways trading range, and today's trading is shaping up like this, traders are waiting to see what's going to happen. So I'm reasonably sure we're going to see a little bit of a breakout, but this is the part that's going to be key, the retest. If the retest, doesn't go too far below this whole 58.90 area and continues to rally, then the market should continue to press higher. I don't think we're going to see a monster move, but it may trickle higher. If, however, this retest gets rather deep, then we open ourselves up to a possible reversal. Right? We open ourselves up to the possibility of a test of the extreme, in this case the extreme being the high, and then another move lower, and after which we're going to see the market test the bottom end of this trading range. Traders would welcome a little bit of a pullback, though. I think they would welcome a better price to buy at. There's going to be traders watching a trend line, so a retrace back here to, say, 58, 85, 86. That would be a welcome place to buy. You can see trade forecasters saying we're going to be in scalp mode for almost an hour, which means we're not going to see a lot of follow through on our signals. It's going to require wider stops, probably all in, all out positions. Just curious whether this first micro macro cross actually got to its profit target. Oh, it did. It did manage to squeak out its high probability target before reversing. Well, it looks like we've hit a little bit of a flat spot. I didn't think the weather was that nice in Chicago right now, but maybe everybody's outside. Looks like we might get a retest of the hard edge. That would be a retest also of the median line. Taking a little bit of a bounce now off that primary resistance zone. We're trying to get a tiny retest of the extreme, a teeny tiny one, only a couple bars between them. We haven't retested yet. We're still, trading below these bars here. Yep. There's nothing going on here. Oh my gosh. Just dead flat sideways. Here's what I think we're going to see is I think we're going to see a retest of the high, one more push, and then a failure. I think we're going to get a counter trend signal here, but whether we're going to get it this morning or this afternoon, I can't say, but it is very, very quiet here at the moment. We'll hang with it for another few moments, but otherwise I think we're going to button up shop. The euro, dead flat, but of course it's near closing for the London session, and crude oil hopping around a little bit, but no real decent signals out of crude oil this morning. The NASDAQ has been at least a little bit more responsive. Enough that we picked up a decent day. But as seems to be the norm of late, the market will just continue to drift sideways. And according to Trade Forecaster, we've still got 40 minutes of scalp mode to endure. Wow. Ah, David's back from moving furniture. Uh, David says, assuming that the panic button just sells at the market if not hitting a deeper bid or asked to ensure a fill, what is the close button doing specifically? Okay, so David's asking essentially, what does this panic exit do? Well, the close button just closes the position that is on your chart. So let's say we had a trade going here that was like this. If I hit the close button, it will close out this position. If I hit the panic exit button, that closes all positions related to this account. So let's say you've got a couple of open trades on your account. And let's say something happens, something catastrophic. And let's say we're long, and all of a sudden the market is, for whatever reason, the bottom seems to be falling out of the market, and you've got more than one open position across several charts. If you hit the panic exit button, it will flatten all positions associated with your account. It's essentially a shortcut to the flatten everything tab. It's not a bad idea before you finish your trading on the day is either go here to your flatten everything tab or to hit your panic exit button, just to make sure you're totally flat on the day. I do remember one time I closed my trading account, not realizing I still had an open position, only to come back the next day to find out that I had a position. Fortunately for me, the market went a little bit higher, but it could have been catastrophic. The market could have made a huge move lower. I could have started the day with a rather substantial loss. Fred's asking, what settings are you using on the Raptor? I cannot duplicate. I am a default with 8 tick. Okay, well the only change I've really made to the Raptor, Fred, is, see, my brick size is 12. My clouds are 8 and 12, or 12 and 8. My Hawk brick size is 6. These are the defaults, so you shouldn't need to worry about that. The only change I've made is right here. Signal parameters soft edge, SE. The extreme reset by default is 1.01. I have mine set at 1.25. That's the only change I've made. My data series is 8 ticks, and I have 10 days loaded, which I believe is also the default. Aspen says today my chart's slightly different than his as well. Well, here, let me reload. By the way, this is something you never want to do while you are in a trade. There you go. Does that look better? Peter asks, do you ever place a limit trade with a large stop loss built into the order? For example, place a limit order with an automatic 15-tick stop loss. So I think what Peter is getting at is, normally when you use limit orders, you're anticipating where the market is going to react, where the market may bounce. So I can tell you there's a lot of traders looking at this whole 58, 83, 84 area for the market to make a reaction. They're going to be watching the trend line. You cannot take that type of order with a stop order. The market will, you're going to get an error signal. You can't do that. In order to enter below the market, you need to use a limit order. So I could look to buy 58.84, and Peter's suggesting, run a very deep stop like that. Normally I don't, Peter, and the reason I don't is, I guess the way I was taught to trade was always more reactionary. I'm not saying there's anything wrong with this. I know quite a few traders that do very well with limit orders. But normally when you use a limit order, part of the appeal of using a limit order is that you keep your stops pretty tight. You might risk $80 looking to make 100. This is where you get a lot of that risk reward stuff going on too, where traders will look at a trade like this and they'll say, okay, I'll look to make approximately twice my risk. They'll do it, or they'll attempt to do it with limit orders. The problem with limit orders is that they are predictive. Right? I'm predicting that the market is going to bounce here. I'm predicting there's going to be a reaction at 58.84 and that the market's not going to go any deeper than 58.81. It's kind of more like gambling than if I see, a reaction off the hard edge. I will set, I gotta change my order. I will look to buy, but only if the market takes out 58.83 3/4. If the market does not breach 58.83 3/4, I won't buy. So for me, it's always been a little bit more reactionary than predictive. But you can bet dollars to donuts there's going to be some buying going on here at that 58.84 area. All right, well, we'll take a couple more questions. One thing, in regards, before we leave that whole limit order thing behind, I do know traders that will try this. They'll allow the market, say we're looking at like a hard edge bounce signal here, they'll allow the signal to engage, and then what they'll do is they'll maybe place a limit order down here. Try to, the market has reacted, but they'll try to buy in at a better price rather than buy in here at 53.84. They'll place a buy at 58.83 and try to snag the market at a better price, and then hopefully they won't get left out. Hopefully the market isn't moving so fast that they get left behind. So that's another strategy. I've known several traders to do well with that. The danger, of course, is sometimes the market won't look far enough behind, and and it will go on without you. thanks for asking, Peter. That's an interesting question. Okay, David. David, you got some tech questions here. I may end up having to refer you to Ben. David's asking, is the close button configurable? Well, no, not really. It will close all open positions that you have on the chart. So for instance, if I set up a trade like this, I submit it. Oops, I forgot that's a limit order. If I set up, let's try this again. Oh, okay, well, or you saw it, just cancel the order. So if I submit the order, this order is live. If I hit the close button, it will cancel all live orders on this chart. David says, yes, it will close, but by placing what kind of order? Any order. It doesn't matter whether you have a stop, a limit, stop limit, or a market order. Once that order is either pending, well, technically a pending order is a live order. So even though this order is pending, it is still a live order. Right? And as soon as I hit close, it will close out. If I hit the buy or sell market buttons, I'm essentially taking a trade at market. So let's say I sell it at market. As soon as I hit close, it cancels the order as well. Now, the close button always closes at market. So when you saw me hit the sell market button, or if I hit sell market, right now the market is trading at 58.85 half. If I hit sell, that's where I'm at. If I hit close, I'm going to get closed at 58.85 quarter, right? There's a one tick spread. You can see there's a one tick spread between the bid and ask. So the close button is always, it closes on market. Maybe that's what you were asking. Yes, so David says if I'm long, it will sell at market. Yes, always. Same thing with the panicked exit. It will get you whatever the first open order is. So in a market like the NASDAQ, you're guaranteed at least a one tick slip or a one tick loss. So if you buy and close immediately, you will be down one tick. All right, boys and girls. Oh, here's that soft edge sell. Looks like market's going to try to find the hard edge here. But things still very, very subdued. All right, we're going to button up shop here for the day. We'll meet up again tomorrow. If you're trading this afternoon, I think a little bit of a pullback is in order. However, overall, the market's still bullish until we get a really good test of the extreme and another failure. So be careful. It could just be a larger sideways trading range today. All right, we'll see you tomorrow. Talk to you then. Bye for now.